Weekly jobless claims just coming out moments ago, coming in at 222,000, the fourth straight week of declining claims. Good news. This is former Treasury Secretary Larry Summers is predicting unemployment will hit 6%. That's up after the August jobs report last Friday, where the unemployment rate came in at 3.7%. Joining me now, former White House Council of Economic Advisors acting chair, University of Chicago economist, Tom Philipson, or Tomas. Good to see you. I'm just calling you Tom. We've had this discussion in the past. Where do you think unemployment goes here as the Federal Reserve continues to fight this runaway inflation that they in part created?
Yeah, I think it's not looking good because consumption is slowing down, and companies, when they can't sell what they're making, will then go and cut their labor afterwards. But I think the market is pricing in a pretty steep 75 basis points hike coming up in September. We have a CPI coming up on Tuesday that may or may not affect that, but Fed 2 weeks from now will likely go with that. And they're certainly coordinated in their messaging this time, which wasn't true in the summer. Every Fed official that spoke yesterday and have now gone completely hawkish. So the market is kind of pricing that in, I think, those kind of discussions.
Tom, are they going to be able to get the Fed funds rate above the rate of inflation? Where do you see the direction of inflation here? Because, again, the Federal Reserve has enriched the leveraged rich even more by inflating assets and by creating this inflation and making it hard to find a safe investment. They have crushed working people, responsible people. So the inflation is what's the pain and the tax on working Americans. Where do you see it going from here?
Well, I mean, what also is coming through in September is not just a meeting in 2 weeks, but their balance sheet is enormous. As you know, it's $9 trillion. But they're now starting to ease that balance sheet off, which will also be sort of pushing rates up. So, but they're doing it at a very, very slow pace. It looks like it's going to take them 4 years to go back to pre-COVID balance sheet levels, and it's going to take them 8 years at this going rate to go back to pre-financial crisis level of the balance sheet. So that pressure is going to be coming in, and I assume there's going to be another crisis going on before that. So we're in for kind of a rough inflationary period because the money level is still very high relative to GDP, which is ultimately a very important source of price levels.
One thing I would expect to start hearing out of financial advisors to the president and members of his fiscal team is that the debt to GDP ratio is going down, but it's only happening because of inflation, because that inflates the overall nominal value of our economy. So it makes it look like the United States is in better fiscal health when it's not. It's literally just a math trick.
Yeah, no, and inflating away the debt is just a tax, right, on the population. So I think in general, I think the administrations have oversold how fiscally responsible they are. They wanted to go out with Build Back Better with $5 trillion, and then they couldn't get it. And then they're arguing because the COVID programs are expiring that they're fighting this inflation with deficit reductions. So I think it's very misleading. The economic messaging out of the White House has been extremely hard to understand for economists, I think.
In terms of what's going on overseas, Tom, there's an incredible energy crisis happening on the continent in Europe. The United Kingdom coming out with what is essentially price controls, price caps on the electricity bills, the power bills that families in the UK will have to pay over the next 2 years. That's a policy mistake layered on top of a policy mistake. And the United States is headed in the same direction in terms of what's been happening out in California. How do you see this playing out? Because a deep recession overseas means a deep recession here. It's unavoidable.
Yeah, no, recessions are very correlated across the world. You know, we live in a global world, even though the U.S. is less dependent on other economies. Like in Europe, every country is very dependent on every other country because their export and import ratios relative to their economies are much higher than the U.S. We're actually kind of self-sufficient relative to the European economies. But I mean, it's the talk of the day on every channel in Europe. I hear I have relatives who live in Sweden, and it's a disaster coming up in this winter.
It is a disaster, and because I'm a nerd and don't really have a life outside of work, and I was thinking about what's going on in Japan, for example. It's all of the potential potholes globally that I think people here, you know, in the United States and particularly within the Biden administration ignore. If you look at Japan, you know, they've been trying to get a little bit of inflation for the last 30 or so years, but the currency is collapsing and money is leaving Japan. And I do wonder if Japan ultimately, to prop up its currency, has to start selling our bonds, and what that could potentially do to longer-term interest rates. That's just one of the things that I've been thinking about in the last several days.
Yeah, I mean, we've always been the safe haven when the world goes into a storm, so I'm not so worried about that as you may be. But I think that the real foreign issue, the number one issue, which is so sad, I think, is that Russia is now giving us a gift to produce more gas for Europe, but the Biden administration is saying, no, we can't, essentially, right? So imagine if the Trump administration was currently in the White House, we would be selling gas to Europe like it was no tomorrow, essentially. And that's not on the table currently. This could be extremely helpful for the fossil fuel industry in the U.S., which is the greener fossil fuel industry and the greenest fossil fuel industry in the world. So not only would it you know, improve the global warming situation, but also would be great for America.
It would, and it was the reason that the fracking and natural gas helped the United States lower its per capita emissions to levels not seen since 1950, right, in the post-war era. That was one of the things.
Yeah, that's the troublesome thing that's not realized, which is, we are greener in our fossil fuels. So until we get innovation to get green energy below fossil fuels, and when markets will adopt green energy voluntarily instead of all these crazy mandates like we're seeing in California, until then, the best thing for global warming is U.S. fossil fuel. So they're actually acting in a counter-productive way with their own objective of trying to reduce global warming by having fossil fuels shut down in the U.S.
Great to see you, Tomas. You prefer Tomas or Tom?
Good to be with you again. Either way is fine. Tom is probably easier for you, right?
I'm from the South, so just expect me. Your name is Phil, and I'll find a way to butcher it. Tom, good to see you. Thank you so much.